This is Movers and Shakers, where we interview the upcoming generation of make it happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host Joshua Ryan Rusin, the community director of Jake and Gino. Josh, how you doing today, bro?
Gino, doing well, man. Excited about deal flow we got going on. 4 deals under contract. And I think it really goes to show that persistence and perseverance pays. And if you keep showing up, eventually you're going to get lucky. And that we did now. So, Gino, what's going on in your world?
I'm waiting for you, Josh. I'm waiting for you to ask. There's a lot going on in my world. I'm excited about today's show because 2 guests today have W-2 jobs, but they still find the time to invest in their business, in their relationship. We're going to be discussing partnerships. We're going to be discussing mindset, goals. We may be even getting a little vulnerable today, Josh. Are you ready to get vulnerable, Josh, today?
Let's do it.
All right.
So speaking of today's guest, we have Travis Limbocker and Robert Musallam. They both joined Jake and Gino just over a year ago in February of 2021. They are managing members of Grindstone Capital Ventures with a vision of building a business that gives them more time with their family and closest friends while improving their communities and providing safe and habitable housing to the residents. Welcome to the show, guys.
Thanks, guys. Thanks for having us.
Yeah. So, gentlemen, all right, here's what I want to know. Tell me about how you two met, when you decided to get into real estate, why multifamily. Bring us up to speed on all of that.
How we met. We have been playing hockey together since, I would say, junior year in high school, but we met in middle school. Same middle school, same high school. Really, hockey was the connection point where we started playing together. Played tournament hockey, turned into ice hockey. Now we're older guys playing, rec league where we can. But overall, that was the connection point. And since high school, really, we went to college together, college roommates, and basically every major life event we've been at for each other. He was the best man in my wedding. So we go back deep. Good foundation for partnership. You can't ask for a better, foundation.
But then how did you guys figure out you wanted to do multifamily together? I mean, it's rare that 2 people like multifamily. One of them may like single families. How did you connect with a multifamily?
I had to pass it to you because you're the catalyst for ultimately how we got into real estate.
So I was working for the San Francisco Housing Authority at the time. And I kind of realized that there's a lot of landlords in San Francisco making a pretty penny on, multifamily investing. And so I was in a position where I was able to tap into them as a resource, talk to them, connect with them, network, learn a little bit more about real estate. And I just kind of realized I'm on the wrong side of the equation. And so he was getting married. He was going on a 3-month honeymoon. And I, as a gift, I gave him Rich Dad, Poor Dad to read on the plane. And then he was ending his honeymoon in Southeast Asia. And me and my cousins actually went out and visited him in Southeast Asia. And all he wanted to talk about was real estate. So by that point, I think the book did its job. And, within, a couple of weeks of getting back from that trip, we sort of formalized a partnership. He wrote out like a 25-page business plan on, how we're going to, ditch our W-2 jobs and get to financial freedom. And within a couple of weeks after that, we were in contract on our first property and just kind of took off from there. Now, about 6 years ago, can't remember when you get married.
So first deal. So what did that first deal look like, Travis?
So Robert's been a real estate broker in his life. He worked at the housing authority. He's surrounded himself with a network of folks that have always been in or around real estate. So our first deal, we were looking at what's the way we can get the easiest entry point, get some experience under our belt, and really just start going through the actions of being a landlord. So we landed on turnkey, I believe, as just an entry point because of the obviously lower obstacles to entry. We had some cash that we had saved up together. We looked at markets that had affordability to where we can use our down payment, get a conventional loan, and just buy a turnkey property. Mm-hmm. We ended up buying one in Kansas City, one of Robert's connections through his real estate network as a wholesaler. And that wholesaler had boots on the ground out in Kansas City. We flew out to Kansas City actually after we had gotten a contract on this duplex. So we saw, sight unseen, understood how to underwrite and looked at what the cash flow could be. Turnkey properties, tend to spit out some level of cash flow for you. So we went out there, and then while we were out there, we met the partner on the ground, and he ended up introducing us to a 4-plex. And that 4-plex we bought from him. He gave us first dibs before it was even actually turned. And then we added that to our portfolio a couple months later. So the first deals were really that duplex and the 4-plex. that we were able to, really start our investment journey on and learn how to be a landlord and learn that when a roof goes bad or a flood happens, that your cash flow is gone for the year, which segue into, maybe multifamily at a larger scale is a little bit more efficient and hedges against, the broken heater or whatever it may be.
So then you guys get those couple of deals. How do you start scaling up and looking at markets? And what was the next step after getting those 2 deals?
So just at the time, so I was doing real estate sales in the San Jose area, and on the way to Kansas City, I had identified a multifamily property in the Bay Area that was pretty distressed, and I noticed in the disclosures that the seller was willing to carry, which is kind of rare for a low cap market like San Jose. We brought the guy in and just made him a pitch, and he ended up basically giving us the property at 100% seller financing. And we brought in a partner to hand over the construction funds, and we just realized you can't do this in 1 to 4 unit properties, right? The conventional loan side of it just doesn't work as well. You can't get as creative that you can on the larger multi side. So we ended up taking that 6 unit down. It's been our best performing property to date. We refinanced it after a year, took the old seller out after the carry, and just realize the larger multifamily is where it's at. That's where we can build the greatest wealth, and the next step after that was we realized okay, we really like distressed properties because the partner that we brought in ended up being Travis's dad, and Travis's dad is a contractor for 10 plus years. So we like that we had that sort of that skill set, right? Not everybody is able to go in and look at a property from a construction standpoint. So we had that in our back pocket, and so we went and realized that we like college towns, and we started looking around the Southwest. At the time, Travis was in San Jose, but now he's in Denver. So we were looking, 2-hour flights around the Bay Area, and we settled on Arizona. Specifically, we ended up in Tucson and bought a building in a 24-unit distressed building in Tucson. So that's sort of our trajectory, is that we've always sort of identified, what are the key indicators that we really like. College towns for us were one of the big things that we liked. There's always an economy going around college towns. It wasn't much more sophisticated than that then, and I'd like to think we're a little more sophisticated now, but who knows? But that's sort of the trajectory. We realize, you can only buy so many 2s and 4s with your own money. The 6 unit was creative financing, and the 24 unit, we could have done a better job of financing it, but again, we didn't know what we didn't know. So, now we have an understanding of, bridge debt and sort of all of the other pieces of the pie that we can use or the tools in the tool belt, if you will, that we can use to scale up. But that Tucson deal was a really fun one for us, because it took us from, 6 units is a small unit, but 24, now you're starting to get into some real big scale, and stuff hits the fan a lot faster, at the larger scale.
Yes. So you guys, what problems were you experiencing before you joined Jake and Gino? It seems like you had a nice trajectory. You had the duplex, then the 4 unit, then you had a 6 unit, then a 24 unit. What problems did you come up against before you joined the community?
You'll see a pattern here. Rob's usually the catalyst of, okay, what's the next thing we need to be thinking about? Visionary, if you will. So I think our biggest thing was we wanted to scale this up quickly. We have a very clear objective. It's very simple. It's what everybody's, I think, in large part is, at least to some extent, as part of their objective, is to be able to do this full time. We have the passion for it. We want to be able to do it full time. Obviously, you need the income streams to give you a foundation to be able to do it full time. So ours has always been, how do we get more yield, right? At least in the near term future, so we can go and do this full time and really start building our business. Because having the time to do that is priceless. We're not quite there yet. So that was the catalyst for saying we need to surround ourselves with people that are doing the scaling up, building their business, people that are outside fundraising and getting syndications going and being able to go and scale their business and build more revenue streams. So the challenge that we're running into was really, it was just the proximity. We were our own group, obviously scaling up, but we wanted to be exponentially grow that. We felt joining a network or a community of folks that were always thinking about that, and that was their day-to-day. We live and breathe this every day. That would help us connect with the right people and ultimately scale our business faster. That was the catalyst for joining the community. Did I miss anything?
I would say from an education standpoint, the biggest thing was, where do you get the capital to keep pushing? We've hit our theoretical wall. and in terms of what we can put into our own deals now, especially at the scale that we're looking at, right? So for us, it was, okay, people are doing this, people are buying buildings. How are they doing it? And so as we started, sort of researching that, it kept coming back to you guys, and you building a community of folks that are successfully and competently buying buildings for long-term success, right? That was the consistent theme that just kept coming, right? So it was, for us, it was really a no-brainer at that point. We knew from a vision standpoint where we wanted to be, and for us, it's never about ego. It's about just learning and making sure that we're taking the right steps to ensure that we can get to where we want to be, right? And so for that, Jake and Gino filled the gap perfectly.
This time last year, guys, we were sitting in Estes Park. So we kind of upgraded to, we're at Palm Springs now. We upgraded the temperature a bit. It's a little cold, but Estes Park was a frozen wasteland. When we were there, we were in a cabin planning out our very first vision traction board. And as we were going through that conversation, it was clear that we needed to be a part of a community or a master class or a mastermind, however you want to describe it, that keeps us accountable in a lot of ways. And we can get a level of coaching and mentorship that we were just missing. We don't know what we don't know. How do you take the next step? So that was really what we talked about up in Estes Park. And then I think a month later we joined, or less than a month later.
Awesome.
Yeah, Robert, Travis, question for you. So I remember when we were all connecting on the front end, you vetted several different mentors. I guess, let me ask you, what stood out? Why Jake and Gino? There's many people that do this.
Great question. It was kind of qualitative for me. Mostly it was just the feeling we got speaking with you and Dylan. We also had a level of history. We had listened to Gino, you and Jake on the podcast way early on. Bigger Pockets, I think, was the one we listened to you on. And just the more of the, I guess, philosophy around the community, the network, helping each other out. I think ultimately how I felt, I'm not going to speak for Robert, how I felt going through that intake process was there's a lot more care. There was a lot of talk of mindset, and that will never be too much in abundance. I think if you keep talking about it, it becomes your typical day-to-day vocabulary, which is good because you got to have a positive mindset through all of this. For me, there was overall the care and the feel that I got in the intake. And then ultimately, when you join the community, you see the level of support that the community provides. I think that was missing in some of the other programs that we were looking at, just that general feel. So for me, it was very qualitative. It wasn't like, oh, their education program has better content on how to buy, how to finance, how to manage. It wasn't necessarily that for me. It was more along the lines of the people. And one of my mentors in life has always told me he bets on people. So this felt it was the right move for us, just from a pure philosophy and people standpoint.
Love that.
For me, it was I felt that the other companies were a little too pushy on the sales side. I'm a big believer in like the one-on-one connection that you make with people, and what I kept hearing from your end was family, right? Like connection points with the community. And as you guys are probably aware, right, you're the average of the 5 people that you're around all the time, right? And I didn't get that feeling from the other groups, and I got the feeling that I could really expand those 5 people in my network in Jake and Gino. And the crazy part is now it's like I'm the average of the 500 people that I could be around, right? Because every day I can have a conversation with somebody who's doing this, or who just started, right? And it doesn't matter because I can learn something from everybody. And so I'm really happy with the fact that was my gut feeling going into it. And then after pulling the trigger, it's just exceeded my expectations from that standpoint.
Well, let's discuss that. I met you guys a couple weeks ago in Phoenix. We had that boot camp. I mean, talk about that. And I want to get into the mindset because you guys are out, you're doing your mastermind for your yearly thing, but just discuss that, just getting out to these events, meeting other students, networking, having fun. What were your takeaways from that boot camp that we had in Phoenix? It was buy right. So you talk buy right, manage right, finance right. That was a buy right boot camp. What did you really enjoy about that one?
Yeah, I mean, last time we went to a live event was in Knoxville last year. It was a money mixer. And there was like 150 people at that one. And that was all about, connection on the bus for, a day straight, right? This one was a little more intimate versus the money mixer, but really the connections. I mean, we have one of the students is a partner of ours on this deal that we're syndicating, being able to sit down with him and talk about everything, lay it all out, have working sessions in the middle of learning more and more. Bill's our coach, so you always love a good rant from Bill. So you got to see that live at some point in your life. So that's also something that is for me. It's great listening to him because he's a wealth of knowledge. But overall, the connection piece and being able to sit down with our partner, being able to sit down with other folks and talk about what they have going on. There's a lot of new students at that one, which is great because you get a chance to hear what they're looking to achieve. And everything in this community is that go-giver type of philosophy. So it's like wherever we can help, even if it's just answering questions, gives us ability to also play that role versus just being the student, which is nice. So that's for us. Phoenix was good to get back in front of people, for one, just to see people face to face because it's been a while, and then obviously being able to actually now talk to folks that we've been working with. So there's that working relationship, and then the content obviously is very helpful because, again, things are changing very drastically right now in the market, and hearing what folks are doing and hearing how, for example, Bill thinks about it with market cycles it's always a good refresher, because if you turn yourself off to that because you feel like you know what you're doing, market changes, then you're in a whole different situation. So it's a constant education loop, basically, is what we get from those events as well.
Awesome. And you, Robert?
Yeah, I'll just reiterate what Travis said. I mean, it's been great because over the last year, we've had so many conversations with people. And so to now, when you go to the Money Mixer, you're an unknown commodity, right? Your first event, you're trying to just like shake hands and meet as many people as possible, as quickly as possible. But, once you start going to the second event and the third event and start compounding that, then it's, the second or third or fourth time that you might have now communicated or met with somebody. So the conversations get deeper, the strategies get, a little bit more fun to discuss, just everything becomes a little bit more vibrant in your communications. Right. And so you kind of get to come out of a session here, you're never taking, 100% of the information in and running with it. You're grabbing the one or two nuggets that really resonated with you and your business at that point in time. And then you have like a more robust discussion with somebody about, those particular things that really intrigued you. Right. And since you've already been in the community and established a relationship, or at least communicated a few times, it just makes those conversations easier. So it really just like compounds your knowledge, and it compounds your kind of motivation to keep moving forward. That was what I noticed. The biggest difference for me between Knoxville and Arizona is like just the amount of people that I was able to meet in person that I've already spoken to versus, that first time in Knoxville where you're kind of like the new kid at school trying to figure, who to talk to and who does what and, what do I talk about? All that kind of stuff. So
that's awesome. I think what you guys did also is growth. I mean, in Knoxville, I don't think you really had possibly a grasp or understanding of all the education, all the content, all the material. You guys have grown in the last 7 or 8 months. You've learned a lot. You've dove into the education. You're underwriting more deals. You're looking at more markets. So that growth is also compounded. Now, at Jake and Gino, what our mission really is, we want to create multifamily entrepreneurs. And where you guys are right now, right before I got on the call, you guys are away at a weekend event, just you and your team, really working on the business. That's the whole thing. And you're not just working, you're not working just in it. You're working on it. You're planning your goals. Talk to the listeners and describe with them what you're doing this weekend and how this sets you up for success, and how multifamily you're viewing this as not just buying an asset, but you're viewing it as a business.
Yeah, I would say daily life is crowded, right? We're both in W-2 jobs. He's got a couple kids. I got a kid on the way. It's a crowded, time is of the essence, and you're trying to grow this business, and your business doesn't wait for you, right? Stuff happens and you've got to make time for it. So, you try to do as much of this during your weeks, during your months as possible, but nothing can replicate, just taking a few days out of your entire year and just focusing 100% on, this business, whatever this business means to you. Right. And for us, it's trying to scale up a multifamily. And for what that does is it sort of allows us the space in person, since again, we're all, kind of far away from each other, to really just hammer out, issues, things that have been, pissing us off for the last, few weeks or months or, over the entire year, that it's hard to communicate over phone or over Zoom. So it really allows us the space to do that. And then at the same time, kind of hit refresh and realize like, okay, what did we do well last year? What do we need to get better at? And then ultimately, where do we want to go? What does this year look like for us? right? And when you can do that in such a concentrated space and time, right? Just 2 days for us, 8 to 5, 9 to 5, whatever it is, it just accelerates your motivation and your growth for that year. You realize that like your goals, because you sat down, you thought about them, then you started really like figuring out what are the steps I need to do to get there. And then you realize, oh, this isn't that daunting, right? Because you took the time to really like break down how you're going to get there. And then you now realize, okay, next year, my goals are going to be that much bigger because I know what the appropriate steps. We've already done this for an entire year. We can come back, recalibrate, and then make those goals even bigger the next year. And that's kind of what we're doing here this year.
Yeah, the theme this year is very different from last year because like Robert said, when things are okay at home, i.e. in your business, you can take on the external forces that happen every day with being a real estate investor. And I feel like over the last couple months, our business has scaled to a point where it's very unlike what it was 12 months ago. So that brings a new level of accountability for us as individuals, a new level of systems and automation that we need to be thinking about. Because if you don't air that out and you don't start taking care of those things, piling more units on top of it is going to be that much more challenging. I think we all agreed yesterday. We started this year with issues list, personal frustrations, and what is your personal success criteria, like gap in the gain type of success criteria. And that was a much different starting point than it was last year, where it was all about what's the annual rocks, what's the vision, what's the 10-year outlook. We kind of flip-flopped it because the calling it out on where we're having issues, where us as partners are not collaborating or communicating, you started to feel like the business was starting to take off and get a little bit off the rails. So this is like reining it back in. So the common theme for us this year was making sure that we all had the space to air that out. Mm-hmm. The whole be vulnerable piece. It was like, what's your frustration? Okay, then it was like yesterday we were talking about particular instances of where we didn't agree with each other, and it gets into that kind of healthy level of conflict. So it was a very different theme this year, and we're going to carry into today. But really, it's about making sure that if we're going to be adding to our business and scaling it pretty extensively, which is always the goal, are we going to be able to rinse and repeat and simplify things to make it easier on us as we continue to juggle life?
I want you guys to write this on your vision board. This is courtesy of Frank McKinney. Invite conflict with respect. If you can do that, and we've lost that in this world, we can't have an argument without being respectful towards each other. And we call each other names just because we have difference of opinions. And sometimes I hear someone's opinion, you may not agree with them, but you may be able to extrapolate something out there. So everyone listening to this, write that down. Invite conflict with respect. And that's one of the best things you can do as a partner. Is if you're married with your spouse, you can't agree on everything. And it's better to be vulnerable sometimes. It's better not to keep it bottled up and to go out there and, have an argument, but be respectful about the argument. And that's the important thing that you should be as partners. Now, how did you guys grow the partnership? Because there's a lot of people out there. I was on a webinar last night, and one of the questions was, well, how did your wife let you do this? And it's really, how did she give you the respect, or how did she trust you? And partnerships are really important, whether you're working with your significant other, your spouse, or a business partnership. Robert, what was the genesis? You knew each other really well, but what has led to the success of this partnership between you two guys?
I'm lucky in that, I've known this guy since middle school. We've literally done everything together for the most part for the, last like 20 years. So it for me, it was a no-brainer as to who I wanted to partner with. The other thing I would say that the real, he doesn't like when I say this because it makes me feel uncomfortable, but I wouldn't have this level of success if it wasn't for him. And it's not that he isn't this, but I'm more of the reserved, like, measure twice, cut once kind of guy. And he's kind of like, yeah, that, and let's pull the trigger. Right. And so that balance helps us out. You know what I'm saying? Like, I feel like if I had done this by myself, I wouldn't be nearly as far because I didn't have that person to balance me out and say like, no, we'll be fine. You've done all the underwriting. Everything checks out. What's the problem? Let's pull the trigger.
So right? Robert, you're Josh and I'm Travis, basically. That what you're saying. So Josh measures 3 times. And
I'm not as good looking. So
and he'll say here, and then I just say, let's just do it. Let's just pull the trigger and let's let it wing and see what happens, and then we can course correct. I love that. That's great advice, actually. That's excellent. I love the way you two balance each other out. That's what you need. You need a level of balance. You need caution, but at the same time, you need to pull the trigger and you need to trust each other. And if something does happen, if there is a mistake, it's not truly a mistake. It's just a learning lesson. If there's a failure, you're never going to be successful on your first go around. The first deal you're underwrite, you're not going to get that first deal. Chances are you're going to look at the deal and say, well, what did we do wrong here? And let's figure out for the next time. So I love that. That's great advice.
Yeah, Robert, Travis, one thing I want to dive into. So you joined a year ago. Let's talk about some of the deals you've done, how many units, number of deals, and really break down one of the deals you've done.
Yeah. So our whole vision last year was we got to surround ourselves with people that are doing this, people that are talking about it, people that are educating on it, so we can scale more quickly. The results are, after 12 months, we have 3 properties that we purchased. We have 2 in contract right now for a total of like 180 units.
Wow.
And you look at previous 5.5 years, we did less than 40 units in 5 years, or if you talk somewhere in there. So that was the level of really the level of scale. I think the best example that we can walk you through is, we were talking with Bill around markets. So we had invested in Bay Area, we invested in Kansas City, we have invested in Arizona, and we're starting to think about more yield as everybody's been experiencing it. Cap rates are compressing everywhere. So what markets can you get involved in? Originally, we thought, what, it would be great if we had a focus on the market where our coach is at, i.e. Atlanta. And then very quickly, Bill was like, I'm going to smoke you in that market because I'm in the market. We're like, mind-boggling, like big aha moment. So we did the same thing that we did. I live in Denver, Rob's in California, but we did the circle around where can we invest? Where's more yield markets for us, since that's a goal. And we landed on Oklahoma. So Oklahoma, we dove in and have focused 110% in that market. And as we got focused in that market, broker relationships, et cetera, the first portfolio that we bought was 3 units for a total of 69 units, all in the same block. And that really was the starting point for us in Oklahoma. And then it's kind of built from there because of the broker relationships. But overall, it was a conversation about one that was for sale, 25 units, talk to the broker. And like, the seller also has units on the same block all over the place. It's right next to the University of Oklahoma, kind of our thing, if you will, because we invested right next to the University of Arizona in Tucson, right next to San Jose University in San Jose. So he said, great. So we talked to him about it. He said, these other 2 are for sale as well for a total of 69. So we took those 2 off markets, added it to the one that was being marketed, 25 units. And we basically went through the underwriting of all of it and ultimately ended up purchasing it all in one single transaction. So that was the entry point into Oklahoma. So really, it was really about the broker relationship. Right? Talked to the broker. They said, this group also has more properties here. Great. We'd love to see what else they'd like to sell, as we got a pretty good exchange that we want to bring into Oklahoma, and we can go after more units. That was really the starting point there. And it really was, nothing's different for us. We've always been value add, the Class C purchase. This time we used bridge funds, which we should have done in previous deals. But again, you live and you learn. And we're in the middle of repositioning that asset right now with market rents that are higher than we originally projected, just because of everything that's happening in the market. So the theme of all that really is the focus. We picked the market, we dove into it, we met all the brokers, went out there consistently. We built a good community of Oklahoma investors in Jake and Gino. But it's really been the focus in that market that's allowed us to scale so quickly, as well as the mentorship and education of the community. Because there's always opportunities, always people looking for folks to help out. Now we have 28 unit in contract on that same block, so we can control more of that area. And then we're talking about this 80 unit that we're in contract on to formally syndicate, 5 miles north in a good sub market of Oklahoma City. So it's really, for me, it's been, you get a lot out of having focus in a market, and you can add more.
I just think that, from a success standpoint, first things we realized when we joined the community was that, we have more money than we think. And it sort of sometimes takes somebody to kind of just like turn you a little bit to the left so you could see something from a different point of view. Right. And so now we looked at our Tucson property and we're like, we have pretty significant equity in that property now. Can we exchange that and go buy something bigger? Right. So as we were looking around thinking like, where we're going to get the money to keep investing in, we realized like, oh, if we just kind of turn to the left a little bit, there it is. We could see that we have some money here. So why don't we look at, exchanging that and buying something bigger? So thankfully for us, the 69 units that he's talking about, that's an in-house purchase. There's no other partners, right? And Gino, you were talking about that at the top of the call, right? Keeping that stuff in-house is ultimately going to build you the most wealth, right? And then, yeah, the other two deals will be syndications, but that's the thing that I think your community has provided us, just a view of the same real estate through a different prism, right? And that has accelerated our growth tremendously.
Let me recap this real quick before we go to short answers, Josh. You said, Travis, 40 units in 5 years, correct?
40 units in 5 years.
The first 5 years. So the 5 and 6 years ago, there were a lot more buying opportunities than there are now. I would say that that's the case. 180 units in 12 months. Just think about that, everybody. Everyone who's listening, it's not the right time to get into multifamily. It's only the right time when you're ready. When Travis and Robert were serious and they were ready to start expanding and saying, hey, we need a little help here. We're stuck at 40 units. How do we get that help? What do we need? And everyone extrapolates something different from a community or from an education or from a training program. I think for them, they hit it on the head. It's about focus. It's about selecting a market and becoming an expert in that market, and then learning how to go down, do property tours, how to really create that relationship with the broker, having a coach there telling you, you shouldn't say that. This is what you should say. Tweak that underwriting a little bit. Why? You can do that. Ask the broker if there's more deals, if this seller has more deals. That's what you get from when you start putting into it. Fortune favors the bold. Travis said those rents right now are higher than what they underwrote them for. Well, that's what happens when you take a risk and you become you're bold. Fortune usually follows that. That's really, really important, everybody. That focus is so key on getting into a market and understanding where that market is. Let's take a quick time out to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created. Buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
All right, gentlemen, I got some short answer questions for you here. So, all right, one thing we didn't touch on that I do want to hear on is we heard what you did last year. What are the goals for the next 12 months in your investing business?
For us, you hear it all the time. A goal, a lofty goal, something that makes you feel uncomfortable. So we got together at the end of last year and we're talking about, okay, what makes us uncomfortable? Is it 300 units? Is it, $1 million in gross revenue? What are the things that make us feel uncomfortable? And it wasn't 300 units. It wasn't really 5 because of what we've seen, at least in the markets that we're focused on, the ability to scale quickly and the confidence that we now have people that we can go and fundraise with grew drastically. So it's a anchor point for us. But what made us uncomfortable was 1,000 units. That scares me because it's like, how are we going to operate that? If everything stayed the same today, how are we going to operate 1,000 units, right? As predominantly the sponsor and the operator. So we got a little uncomfortable with that number. And then we kind of backed into, okay, what does profitability numbers look like or revenue numbers look like for us? What are we trying to achieve? Well, we want to scale our business. So we did the math. How much are we going to need to scale our business this year in terms of expenses, right? Great. That becomes a part of the revenue. And then what do we need for our own, our own cash flow, et cetera? That got added. So for us, after yesterday's conversation, really the goal is to really start building out business process to the point where it's documented, where we can rinse and repeat as we buy a 200 unit or a 5 unit. Doesn't matter. The asset management piece for us is our superpower. It's what we learned as hands-on landlords and going through everything down to the stud rehabs to, a little bit lighter of a lift. But there's a process for every single property that we've managed. So for us, it's really building out the systems and business process at the first half of the year so that we can take that and rinse and repeat and make things a lot more simple and efficient when we go take down the 100 or 150 or 200 towards that 1,000 unit goal. And really on the personal side, it's really how can we operate as a partnership with more joy and happiness and enjoy the actual journey that we're taking this year outside of units, outside of profitability, outside of the tactical stuff like hire a VA. It was really for me about how can we just be happier and more collaborative and better communicators and enjoy the things that we have in front of us. Like Rob said, he has a kid on the way. I have a newborn on top of a toddler. It's like, how can I enjoy that time despite all the stuff that's going to be challenging me on the real estate front? So we had to be able to have a good mindset, or else this could get to a point where it burns us out. For me, just being happier and working better together as a group is more of a qualitative personal goal.
Love that.
And I think from a goal standpoint, you know, it last year was all about numbers, and this year is to an extent, but this year, like Travis said, we really need to focus in on putting the systems in place, because the systems is ultimately what's going to drive that result, that end number. So, you know, we said 1,000 units makes us uncomfortable. So that's just kind of the number, the anchor point. But, you know, as you know, you guys know, with goals, you put something really big, hairy, audacious out there, right? And it's not necessarily to hit that number. It's just really to keep you moving forward, right? To keep you driving towards something greater. And if you get a quarter of that, you're still doing better than 99% of people out there, right? So you know, 1,000 units is a sexy number, but it's really just, you know, putting something really, really, you know, out there so that we can just keep driving forward. And then, you know, the systems ultimately is what's going to be the biggest benefit to our business. If we can really automate a lot of those systems, and maybe even bring on an extra virtual assistant to help us, you know, to take off some of the load. Ultimately, I don't think we'll have a problem hitting any number that we put out there, right? Because we've built the foundation the right way. And we're deferred gratification guys.
Mm-hmm.
You know, we don't need to get rich overnight. We know we're in year 6 now, and we plan on being here in year 30. And we'll be just, you know, we'll be so much better off in year 30 because of all the work that we did years 1 through 10, you know?
Awesome.
Man, I love that, gentlemen. All right. So if you could go back 6-7 years ago when you first started this business, what piece of advice would you give yourself and why?
Bridge debt
For sure. Yeah, we funded some of these turnarounds with our own money and the money of the partners. When you think about it, what does real estate give us? Many things, but one of the values is leverage. You can leverage other people's money to really go and create value. Bridge debt would be on the top of that list for us if we had to go and say, here's some advice to our 6 years ago self around being able to go leverage more on the rehab side to go create value faster. So yes, we could have sped up some projects. We could have, you know, made the units a little bit nicer with a bigger budget, whatever the decision would have been. But that was one area where I think we learned, okay, going forward, there's some great bridge debt out there. There's still some great terms. There still is today. Why are we not leveraging that to go and create value faster, or just create better value in the communities that we're investing in, as well as the apartments? So that was a big thing for me. Also, we used that duplex and that fourplex it was kind of like the guinea pig to get us to the mindset of, well, we should just scale up. I think everybody goes through that epiphany at some point as they do the smaller buildings and see the value of the bigger buildings, economies of scale, et cetera. For me, the advice would also be get into the larger scale projects faster. Don't be afraid of them. Just get in the habit of underwriting those, and ultimately you get more comfortable with it. I think scaling up faster would have been something that we could have had more success with.
Yeah.
But we had that mental block. We had obviously limiting beliefs and all those things that I think most people experience when they start, and then they just build confidence as they go through it. So those are 2 things for me. I don't know if there's anything else.
Yeah, I mean, obviously, if I know what I know now, I'd start with larger buildings in mind, you know, from the beginning. We took a pause 2 years of not buying anything because, you know, we bought the Tucson deal and we're putting in more of our own capital instead of, you know, leveraging it than we should have, right? So that's a big mistake and a lesson learned there. You know, but things turned out just fine. It's just, you know, if you had hindsight's 2020, right? If you had the opportunity to go back and do things over again, you'd do them a little differently. So I would tell anybody listening that if they're in this space, if they're listening to this, you know, this podcast, they're probably interested in multifamily. You know, don't be afraid to explore the larger buildings, you know, at the start. They're not that much different than the smaller ones. And in some cases, they're actually easier to manage and underwrite and finance and all that stuff because they just produce more revenue for you, you know? So that and bridge debt, that would be my 2 things that I'd do over again.
Boom. Those are fire answers, gentlemen. So, all right, Gino, I think this has been a really killer episode. Hit us with your biggest takeaways.
Well, these 2 boys meet on the ice. Travis gets married on the plane. He's reading Rich Dad, Poor Dad. And then Robert gets on a plane and goes meets him in Southeast Asia. They decided to start a business together, the real estate, and they start buying assets. And as most of us do, they start buying smaller assets, starting out with the turnkey space, instead of saying, you know what, let me go directly to multifamily. That's what most of us know. We start out in the smaller space, knowing that we don't have to, but at least they started out where most people just read Big Rich Dad Poor Dad and put it down and go back to their W-2s and don't think about their future. So from a 2-unit, then the 4-unit, then buying the 6-unit in San Francisco, and Robert working for the San Francisco Housing Authority. That must be a soul-sucking job. I don't even know how you did that. Kudos to you. If you can do that, you can definitely invest in multifamily. So continuing to scale up, going to Tucson, buying the deal in Tucson. And then I think the pivotal moment was not because it's Jake and Gino. You just joined any mentorship program. You invested in your education. You invested in yourself. You invested in the relationships and the time, to take a whole weekend to fly out to Phoenix, to take a whole weekend to fly out to Knoxville. That takes a lot of energy and a lot of effort. And most importantly, a lot of commitment. That's what most people out there don't have. These two have the commitment. Where are they this weekend? We didn't touch mindset. We can talk about another hour on mindset with Travis, but it's about mindset. It's about commitment. It's about focus. All these things that you don't have where you're on an island all by yourself. From 40 units the first 5 years to 180 units in 1 year. That's what it all comes down to. It all comes down to investing in yourself, investing in the people that are around you, and thinking about your goals going forward. And for the record, guys, 1,000 units scares me, makes me feel uncomfortable as well. And like you said, Robert, if you do 200 units, is that really a failure? To me, that's an ultimate success. If you do 50 units, it's an ultimate success because you're continuing to work on yourself and continuing to work as a partnership. So kudos to you guys. This was really an enjoyable podcast, and I love to see the growth and the future growth of this. So, and always, everybody, multifamily is an entrepreneurial venture. That's what we want to create. We want to create multifamily entrepreneurs. And Travis and Robert talked about it. They talked about the systems that they're going to build. You need to get started. Get started small. And then as you start growing up and you start scaling up, you'll see the other things you need. But the key is start now.
Gentlemen, how can the listeners get a hold of you?
Yeah, I think you can, all of our contact information is on our website at www.investgcv.com. We're active in the community. By all means, ping us DM, public post, whatever. Happy to help answer questions. People looking to get into it for the first time. As I said, asset management is something we think about every day. So if there's questions there, we can help there. Feel free to give us a buzz, DM. Our phone numbers, our emails, everything that you need to get in contact with us is on our website.
Perfect. Well, I want to thank you for being amazing guests on the show and sharing your story. Guys, listen, if you like this show, please leave us a review. And until next time, let's make it a Movers and Shakers week. See you, everybody.
Thanks, guys.
Thanks, guys. Thanks for the opportunity. Appreciate it.